Good evening, everybody. Got Kody Ashmore, Director of Weekly Option Strategies, here at Simple Trading, coming to you with the options free video. And what I wanted to do on tonight's free video is cover a setup on United Airlines. If you're looking for a sideways theta positive trade, this is a trade for you. So if you've been trading with me in the options room, you know how I structure my portfolio based over a rating of a -3 to a +3, and I needed some sideways plays in my portfolio, just in case if the market does in fact start to just move sideways for a little bit if it's stuck in between this little bit of a range right here. So I did want to add some theta positive trades, and here is that trade idea, and I believe you can still have a chance to enter if it is a setup you're wanting to play. So United Airlines, what's the setup here? So the trade I did in United Airlines today was an Iron Condor. An Iron Condor, if you don't know, is a put credit spread and a call credit spread, and you take advantage of the premium sold in the credit spreads as price moves sideways within the range. Now I'll break it down a little bit more, but first let me cover the setup of why I chose United Airlines. Well, first, the reason I chose United Airlines is simply its moving averages are all crossed up, right? They are in a mess. That's one thing I look for in placing Iron Condor. Why sideways crossing moving averages? Because it shows there's no real trend. It shows complete sideways type of price action. And then what else do I look for? Next, I go looking for support and resistance. And then I identify those levels. So you can see right here how price bounced off of this level each and every time, right? Which is about roughly 33.87. We could call it 34, maybe even 33.75-ish type of level. But you can see it's a level that's been respected. I mean, you can easily look at it and be like, okay, every time price goes there, it bounces. Simple enough. You can figure that part out. And on the upside is there's a little bit of overhead resistance right here. And it's not the cleanest as far as resistance goes, but you can see how it is respected here. And I did make it a little bit above that. And why did I make it a little bit above that? For one, I wanted a wider window of profitability. And then I also wanted it to be right near the 200-day SMA because I expect price to not really ram right through the 200-day SMA within the coming weeks. So that's the setup. You could easily look at this and identify that price is sideways, and that's exactly what you need in an Iron Condor. And right here, you can see I have the labels placed out where break even is in this Iron Condor. Okay, so now I'm going to go ahead and show you. I'm sure you're like, okay, well, expiration with strikes, so on and so forth, and that's what I'll show you now. So I did October 14th. 41, 44, 35, 32 Iron Condor, and that is, I believe, 25 days out. Okay, so 25 days out, which is a little bit longer than I usually do for Iron Condors. Typically, I like to keep it about 2 weeks of time frame, but the reason I went a little bit further is because of recent volatility in the market. So if it does, for whatever reason, blast out one direction or the other, the loss is less. And then I also do think that price potentially may go sideways into earnings, which is on October 18th. So I played their earnings expiration or the options expiration right before earnings, basically placing a bet that price will continue to move sideways into earnings. And you can see this is a pretty wide range right here, right? All right, so back to the Analyze tab. So like I said, I have the 41, 44, 35, 32 credit spread, and I got it for $1.13. So when it comes to getting a fill, I like to get about 40% of the width of the spread. So that is kind of it's a trade-off, right? In options, there's a trade-off between if you want a high probability of winning or high profit or high probability of being profitable, then you kind of have to trade it off with having a little bit of a skewed risk reward. So for me, when I'm doing an Iron Condor, I like to at least get about a minimum of 40% and $1.13 of credit on a 3 wide strike Iron Condor. That is about 38%, so close enough. It's not going to be perfect every time. So how does this work? If you're not familiar with what you're looking at here, this is a risk graph. So here is your P&L or your profit and loss. and here is the stock price. So that's what you're looking at here. And then this blue line is your profit and loss on expiration day. So in this case, it will be on October 14th. And this purplish one is your P&L for the day, for the current day. And so when you're looking at this, what's going to happen as the days pass is this will start to curve higher and higher, and as IV and theta decay, it starts to go higher and higher. And that's how your P&L will work. And so just to show you what it would look like, you can actually go to Thinkorswim. If you go to here to lines, you can go to day step, and I'll put 4 on there. And then right here where it says step, you could actually change this to where, here, how about, since it's 25 days out, I'll change it to 3. So here, if you look right here, you see the different dates. It shows you what the P&L would be based on the date versus where the stock price is at. So if we were to look at it on October 1st and say it is near 38, you can see that there is $703 of profit. So that is roughly, oh, that's not even roughly, that is over 50% of the credit received, and that's just holding into October 1st. So what that is literally, was that? I'm actually looking now. That's just into next Friday. But so if we held it a little bit into, since that's the first is, I'm looking at the calendar right now. The first is a Saturday, so we'll see what it would be at on the 3rd. So let's minimize. See if we can get it there. Nope. It's not gonna let us do it. Just trying to see. Okay, the 4th, close enough. So what we're gonna do here, so that's into the middle of next week, and so it's not next week, but it's the week after next. See the gray arrow? So that's where it's, or the gray line, that's where it says your P&L will be. So basically, you can get roughly over 50% of it within a few weeks. So you don't have to hold it into expiration, but just to show you how it works. So as time progresses, you see the dates, you can see how your profit and loss get bigger, and then these red dots, or sorry, red lines are your break-even points. So I'm pretty sure you get the gist there. But yeah, so quick recap. I like my moving averages crisscrossing. The ADX is not green or yellow, or sorry, not green or red. It has crisscrossing moving averages. I have no idea why I'm having such a hard time saying that. And then it has overhead resistance, lower support, and just looking for a price to move sideways for the next couple of weeks to capitalize on that theta decay. So that is pretty much it. Thank you everyone for watching this video. If you have any questions, feel free to ask, and I'll catch you on the next one. Have a good night, everybody.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me